I don't really think there's any other way to put it, but Rivian just reported an absolutely terrible quarter, terrible guidance for 2024. The stock is down after hours. And I started listening to the conference call. I got about halfway through it. It was the most depressing conference call I have ever listened to. This is clearly a company in crisis. I just don't think there's any other way around it. Rivian doesn't seem to have the growing demand that they thought they were going to have. Their guidance for 2024 for the number of vehicles they're going to deliver is flat from 2023. So they're losing money in 2023. They're going to lose more money in 2024. Meanwhile, they're committed to building a plant in Georgia, which is going to expand capacity further. Sure, there may be more demand for a little bit lower cost vehicle, but this is just a company that seems to have the wrong cost structure. Maybe it's the wrong product. Maybe they were just building out capacity at the wrong time. And I think over the next few months, investors are probably going to get disillusioned by the direction of Rivian. And this is a really critical point for the company because they're investing a ton of money, not only in operating the business, but also in building out this new capacity. They need to have capital markets be open to the company, whether that's debt markets, which they have already accessed. That's something I'll talk about in a little bit. Or the stock market. You have to be able to access one of those two if you're going to raise money and just survive this point in your scaling process. And I think Rivian's at the point where if the stock starts to drop at a really rapid rate, which it looks like it's going to do after this earnings report, those capital markets start closing up really quickly. It starts to get really expensive to raise any sort of new capital. And they're already at the point where they're kind of on a knife's edge from a financial perspective. So I want to go through the numbers today, but I just wanted to start this with the mood around Rivian just seems to be extremely negative. Obviously, laying off 10% of the salaried workforce is a huge deal for a company like this. If you're in growth mode, you shouldn't be laying off engineers and salespeople. These should be the kind of investments that you're making in the future. And Rivian is obviously going the opposite direction, not the first layoff that they've had either. So I'm going to go through some of the results. I will probably be back over the next few days as I have time to digest this earnings report, all of the information that comes out and any sort of subsequent reporting that happens as well. But I just don't see this as a positive sign for Rivian. So I'm going to get into some of the details and the numbers around why. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go to the shareholder letter that came out this afternoon. This is Rivian's shareholder letter. And I want to just start with the structure of this letter because I have read a ton of these. Normally, you get some sort of consistency in the way that these letters are written. But Rivian has changed some things over time. And just going through the letter, it's extremely frustrating to look at because you can see that they're kind of trying to hide what's actually going on in the business. I'm going to start with this first section here. They have always given some highlights about the business. But the things that they were highlighting early in their history as a public company was, hey, look at what our backlog is. Look how much demand we have for vehicles. Look at the growth in our production. In this quarter, they've obviously pulled back on a lot of those things. Those are things that I've highlighted this in the past in videos on this channel, that they started to change the things that were in this key highlight section. It was the same quarter after quarter, and then suddenly it changed. That should raise alarm bells to investors. But now they're highlighting, oh, we're launching leasing. Okay, great. That's something that auto companies do. They exceeded their guidance. That is absolutely true. We'll get to their guidance for 2024, which is a little bit more important. There was an $81,000 gross profit improvement on a per vehicle basis. This is also a really weird way to frame the fact that we're losing less money per vehicle than we were before. An $81,000 gross profit improvement per vehicle. So just strange framing. But then you go down this report and we've got pictures, we have text, we have some bullet points coming up here. Where are the financial results? Where we're talking about next generation vehicles. We're showing great pictures about products. They're talking about delivery growth, and they're hiding the financials. This should be the first thing that you're talking about to investors, is what do our financials look like? Are we financially strong? But you're not, and that should be a concern. We're on page 11. We haven't even gotten any numbers yet. Finally, here on page 12, we get to a point where we're focusing on gross profit and cost efficiency. So this is Q4 2023. This is really hard to read because it's a really poor image put into this shareholder letter. Small detail, but again, just kind of a strange thing for Rivian. Lost $124,000 per vehicle in Q4 2022, lost $43,000 per vehicle last quarter. Expecting by the end of 2024 to be gross profit break even. So still have about $3 billion a year in operating expenses that you got to pay for, but gross profit going to be about break even. So that, I guess, is progress, but this is a company that's been public for a few years now. So we should be improving a little bit more quickly than this. Now we finally get to 2024 outlook. And remember, we still haven't really talked about what the numbers were for the fourth quarter of 2023, but they're going to give us outlook for 2024. So let's go through that. They delivered just over 57,000 vehicles in 2023. 2024 guidance is for 57,000 vehicles to be produced. This is the first thing that should be a massive, massive red flag for a company like Rivian. This should be a growth company. They should be increasing production. There should be ample demand for their products, and their production lines are brand new. This is not an old production line. They're shutting down production for part of, I think it was the second quarter of 2024, to improve their throughput and try to reduce their costs on the production line. But these are the kind of things that you shouldn't have to do 2 years into ramping your production. A massive shutdown that's going to impact your production that much. So these are just small red flags. It came up on the conference call. Why are you investing so much time and energy and money into improving these production lines when you're building a new plant in Georgia? Shouldn't you just be putting that effort into Georgia? They dodged the answer. But the only thing that I could think of was they're not going to be able to sell 80 or 100,000 vehicles anyways. So why not just shut it down and try to improve operations? It seems like there's a demand problem here, and Rivian just doesn't really want to say it. They kind of say it in the conference call, saying that their backlog has decreased, but it was kind of hard to parse that. And I've been talking about that on this channel for quite a while, that it doesn't seem like demand is very strong for electric vehicles, and for Rivian specifically in that $70,000+ price point. But this seems to solidify it. Hey, we're only going to be flat from a production basis, and we're still going to be building out more capacity in Georgia. Adjusted EBITDA, negative $2.7 billion. Capital expenditures, $1.75 billion. So add those two together, you get to about $4.5 billion that Rivian is going to burn through in 2024. Keep that number in mind because I'll get to the balance sheet in just a second. After guidance, now we finally get to financial highlights. Here's revenue, gross profit. This is the stuff you should be highlighting first in a shareholder letter. If you're telling shareholders how the business is doing, you should be telling them how much revenue you're generating, what your costs are, what your operating expenses are. We as shareholders are here to interpret these financial numbers to then judge how successful or unsuccessful the business is. But we don't get to revenue until page 15 of this shareholder letter. Sorry that I'm so hung up on that, but it's just a crazy thing for Rivian to do, to wait this long to actually get to the actual numbers. Negative gross profit, $606 million in the fourth quarter. That was an improvement from $1 billion gross loss. I talked about those numbers a little bit. I think this is pretty clear. Revenue is going up as they're selling more vehicles, but they're still losing money on each vehicle. And that's really the challenge right now. They also delivered fewer vehicles because Amazon didn't take delivery of as many vehicles. We don't know a lot of the details there. There's a little bit of seasonality, but I do think it's concerning that Amazon let Rivian out of this exclusive agreement. We knew about that in 2023, and now it doesn't appear that they're buying as many vehicles as they were committed to before. So again, maybe a demand problem, not just from consumers for R1T and R1S, but also for the commercial vehicle that was specifically built for Amazon. Operating losses, again, just enormous. An analyst brought up that at the same point in its history, Tesla was spending a little more than half of what Rivian is spending from an operating perspective. So operating expenses for the fourth quarter grew to $975 million. Again, that was up. Maybe something you would expect because the company is growing, but you're still losing money. So it's concerning that you're not offsetting that with any sort of gross profit. R&D expenses, they are doing a lot of their own research and development, $526 million. But like I said, they announced that they're eliminating 10% of the salaried workforce. So some of these costs are going to be coming down. That also means you're not going to be spending money on things like R&D and sales and marketing and things like that. Net cash used in operating activities, $1.1 billion for the quarter. I'm just highlighting some of these cash numbers and the EBITDA numbers because we need to think about the balance sheet, and that's what I want to get to next. The balance sheet not long ago was really a strength for Rivian. They had a ton of cash, not a lot of debt. That has really changed over the past year, and the current spending trends and the pace of this improvement is really what I think is ultimately concerning. If you're spending a whole bunch of money, using up the cash that you got in your IPO and then in subsequent debt offerings, if you're using that money to invest in the business and then your gross profits are improving, so those gross losses are turning into gross profits, ultimately your operating losses are turning into operating profits. If you're seeing positive trajectory in both of those trends, then you can be okay as a business continuing to invest in the business and just burning some cash along the way, as long as the cash burn is coming down. But that's not what we see with Rivian. A year ago, $11.6 billion worth of cash. Debt was $1.2 billion. So add those things up, you have a little more than $10 billion worth of a net cash on the balance sheet. Now, add these two up, you get $9.4 billion worth of cash on the balance sheet, but you also have $4.4 billion worth of debt. Add those two together and you have about $4.9 billion worth of net cash on the balance sheet. Why is that number important? Remember, I talked earlier about that adjusted EBITDA loss in the capital expenditures for 2024. That was $4.5 billion. So if we just assume that is your net negative cash flow for the year, free cash flow, Rivian is going to go from having a really strong balance sheet at the end of 2022 to having potentially net zero cash or being net in debt by the end of 2024. That means that they're going to be running out of cash once you get to 2025. They're going to have to start to raise capital. Sometime this year, they're probably going to have to raise capital. That means either selling stock at this depressed stock price that we have. Shares are going to be down over 90% from their IPO level when the market opens on Thursday, or you're going to have to raise debt. Those debt terms, you already have $4.4 billion worth of debt on the balance sheet. Investors are going to want to know, are you going to be able to pay us back? Those debt terms are going to be really onerous. So I think the only option that you're really going to have is selling stock. So this is why I talk about Rivian being on a knife's edge, because it doesn't have that strong of a balance sheet once you start considering the money that it's going to lose from operations and the money that you have to put into building out this plant in Georgia. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So just even going over the high level numbers, you can see why I'm frustrated with where Rivian is at right now. It's obvious that they're having a demand problem. They're having problems selling their vehicles. Their vehicles are too expensive to make. And they continue pushing forward with all of these expenditures, capital expenditures, building out a new plant, operating expenses, that doesn't seem to be taking them anywhere except for needing to raise new capital that it's going to have to do at a depressed price. I just don't know where Rivian is going, and I don't think we have good answers for that right now. Unless there is some sort of hidden demand for trucks and small SUVs, and the Rivian R1S is a relatively small 3-row SUV. I want to be really clear about that. The reason that they're not selling a ton of those at a $70,000, $80,000 price point is because it's smaller than the Volkswagen Atlas. I was looking at a R1 and it was too small. The way that I looked at the vehicles is I went and sat in the third row. I'm 6'2". I could not fit in that third row. In the Volkswagen Atlas, I can fit in the third row with legroom. The comparable vehicle that they should have probably built is something like the Cadillac Escalade or the Chevy Tahoe, something that's bigger that you can actually charge $80,000, $90,000, $100,000 for. But that's not what they built. They built a smaller SUV. They don't have the demand because competing vehicles are selling for more like $40,000, $45,000. So the premium that you're paying to get an electric vehicle is extremely high. You have all the problems with ramping a new brand, a new production vehicle, which we have seen online. People having issues with their trucks or SUVs from Rivian, having problems getting maintenance done. That's not all that surprising. All kinds of companies have problems with that as they ramp production. But if you're paying a premium for this vehicle, you expect it to be a little bit better. So I think Rivian is ultimately in a really hard spot. It's between a rock and a hard place from a financial perspective, from an industry demand perspective. From an industry demand perspective, I don't think management was expecting that as they were ramping production, we were going to see interest rates rise, electric vehicle demand fall. That did not appear to be where we were headed in 2021. It was maybe a little bit clearer late in 2022 when Tesla started reducing their prices, and then throughout 2023. But that's why I think some of these changes needed to be made a year ago. And I just question where Rivian is going. I'm going to be back with more about this. One of the things that I think they should be doing is looking at selling the company. I think that's going to be probably a better solution for Rivian, for shareholders, for the brand, and potentially for an acquirer, and doing that sooner rather than later. But if you want to see that, subscribe to this channel, because I'll be back with more on Rivian. I think this is a company that's in a fascinating position right now, especially as the electric vehicle industry goes through a really challenging position from a demand perspective. Everybody's increasing production. Customers aren't buying at the same pace, and that really rears its head really quickly in the auto industry. But what do you think of results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing for more Rivian coverage in the near future. I'm Travis Hoium. Thanks for watching, everybody. See you here next time.